Warren Buffett is the greatest investor of all time. But what is his investment strategy? In this video, we reveal Buffett's money-making formula that has helped him build a $100 billion plus fortune. Learn how to invest like the pros. Warren Buffett is not just one of the richest men on the planet. He is the greatest investor of all time. With a net worth of over $100 billion, Buffett built his fortune not by launching a tech company, inheriting wealth, or winning the lottery, but by following a simple yet incredibly powerful investing formula. The truth is, most people fail at investing because they chase quick money, gamble on hype, or panic when the market crashes. But Buffett's strategy is different. He doesn't try to predict the future. He creates it by following an unshakable set of principles that have stood the test of time. So what exactly is Warren Buffett's billionaire investing formula? How did he turn just a few $1,000s into a massive stock market empire? And most importantly, how can you apply his strategy to build your own wealth? By the end of this video, you'll understand Buffett's investment philosophy, stock picking strategy, and the secrets behind his long-term success. Let's start from the beginning. Buffett's journey began when he was just 11 years old, making his first stock market investment. While most kids were busy playing, Buffett was already reading financial reports and studying businesses. By the time he was in his 20s, he had absorbed the wisdom of Benjamin Graham, the father of value investing, and mastered a principle that would define his entire career. Buy businesses, not stocks. This brings us to Buffett's golden rule of investing, a rule so powerful that it has made him billions of dollars over decades. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Now, obviously, no investor can avoid losses entirely, but what Buffett means is simple. Avoid unnecessary risks, don't gamble, and only invest in businesses that you truly understand. And this leads us to the core of his investing formula: value investing. Instead of chasing trendy stocks, risky startups, or overhyped companies, Buffett focuses on businesses with strong fundamentals, consistent earnings, and long-term growth potential. Here's exactly how he does it. Step 1. Look for companies with a strong moat. ARI, moat is a competitive advantage that protects a company from competitors. Think of Coca-Cola. No matter how many soda brands enter the market, Coca-Cola dominates because of its brand power, distribution network, and loyal customer base. Buffett only invests in companies that have a durable competitive advantage, businesses that are difficult to replicate and have strong brand recognition. This is why he has massive investments in companies like Apple, American Express, and Dairy Queen, brands that customers trust and return to. Step 2, buy stocks when they're undervalued. Buffett doesn't buy stocks at just any price. He waits for a company to be undervalued, meaning the stock price is lower than the actual worth of the business. For example, during the 2008 financial crisis, when everyone else was panicking and selling stocks, Buffett was buying them at massive discounts. He invested billions into companies like Bank of America, Goldman Sachs, and General Electric. And when the market recovered, he made billions in profit. Buffett has a simple rule: be fearful when others are greedy, and be greedy when others are fearful. When the market is booming and everyone is hyping up stocks, Buffett stays cautious. But when the market crashes and people panic, that's when he buys. Step 3, invest for the long term. One of Buffett's biggest secrets is patience. He doesn't trade stocks daily or chase short-term gains. Instead, he buys great businesses and holds them for decades. Take Coca-Cola, for example. Buffett bought his first shares in 1988, and over the years, that investment has grown into billions of dollars in profits. The same goes for Apple. Buffett invested in Apple in 2016, and today it's his largest holding, making up nearly 50% of his entire stock portfolio. Step 4, focus on cash flow and dividends. Buffett loves companies that generate strong cash flow and pay dividends. Instead of just relying on stock price appreciation, he ensures that his investments pay him consistently. For example, Coca-Cola alone pays him over $700 million in dividends every year, without him having to sell a single share. Step 5, Ignore the noise. The stock market is full of distractions, media headlines, market crashes, and constant speculation. But Buffett has mastered the art of staying calm. When other investors panic sell during a downturn, Buffett holds steady. He doesn't react to short-term volatility because he knows that over time, great businesses will always recover and grow. Buffett's investing mindset. Now let's talk about Buffett's mindset, because this is where most investors fail. First, he treats stocks like businesses. He doesn't just look at stock prices. He evaluates companies based on their leadership, financial health, and long-term vision. Second, he avoids speculation. Buffett doesn't invest in things he doesn't understand, which is why he stayed away from Bitcoin, meme stocks, and tech bubbles. And third, he believes in making money while you sleep. His philosophy is simple. If you don't find a way to make money while you sleep, you will work until you die. How you can apply Buffett's strategy. So how can you use Buffett's billionaire investing formula to build your own wealth? 1. Only invest in businesses you understand. If you don't understand how a company makes money, don't invest in it. 2. Look for companies with strong moats. Choose businesses that dominate their industry and have a competitive advantage. 3. Buy when prices are low. Instead of buying at all-time highs, wait for market dips and invest when stocks are undervalued. 4. Think long-term. Don't chase quick money. Hold great businesses for years or even decades. 5. Reinvest your profits. Instead of spending dividends, use them to buy more shares and grow your portfolio. Buffett didn't become a billionaire overnight. He built his fortune through patience, discipline, and a rock-solid investing strategy. And now you know exactly how he did it. If you found this breakdown helpful, make sure to like this video, leave a comment with your thoughts, and subscribe for more business and investing insights. The secrets of the world's richest investors aren't just for billionaires. They're strategies anyone can apply to achieve financial success.